Hello and welcome to Virtual Investor Conferences. On behalf of OTC Markets, we are very pleased you have joined us for our Energy and Precious Metals Summit. The next presentation of the day is from Westhaven Gold. Please note you may submit questions for the presenter at any time. You can also view a company's availability for a one-on-one meeting by clicking Book a Meeting. At this point, I'm very pleased to welcome Ken Armstrong, President and Chief Executive Officer of Westhaven Gold, which trades on the OTCQB venture market under the symbol WTHVF and on the TSX-V under the symbol WHN. Welcome, Ken.
Yeah, thank you, Greg. Thanks for having me, and thanks to everyone for signing in to listen to this update. Really appreciate the opportunity, and I'll take you through a deck, and then hopefully can get to some questions as I get towards the end of the presentation. Introducing you to, or if you're familiar with, just giving you an update on Westhaven. Just real quick comments on the cover slide here. Don't often spend time on it, but we'll talk about the Spences Bridge Gold Belt, and our primary property is called Shovelnose. It's named after Shovelnose Mountain. That mountain is the height of land that you see on this photograph, and I think it's worth pointing out just to show this isn't sort of the Rocky Mountains in southern British Columbia. It's a very manageable landscape. It has been forested, it has been disturbed, it's been logging. You can see in the foreground some brown splotches, which are drill pads for the drilling that we've done on the South Zone, which is the main gold deposit on the property. And if you really squint, you can see sort of a straight line that's sort of a cut line of a power line right of way that services a cell tower on the top of Shovelnose Mountain. And that right of way splits between two of the three deposits that we found. So when we talk about infrastructure and accessibility on this property, we really do mean it, and we get a lot of advantages from that. I've already started making some forward-looking statements, I think, and I will continue to, so please just be familiar with that sort of language, and you can take some time. That's posted on our website. So Westhaven, as Greg mentioned, we're listed on the TSX Venture Exchange and the OTCQB. We're a junior gold explorer. The real opportunity for us is we've made a discovery of what we call low sulfidation epithermal gold deposits in southern British Columbia in Canada. And recently, at the beginning of this year, we just announced an agreement with Dundee Corporation where they're going to fund the next $85 million of investment on the project. And so that investment will be non-dilutive for Westhaven shareholders. They will be earning a 60% interest in the project once they've spent the $85 million. But what it's allowing us to do is to realize on the development opportunity that we see at Shovelnose Mountain on the basis of a preliminary economic assessment that we completed in March of 2025, which is very robust at our base case of $2,400 an ounce gold, and even better at current spot prices, and also is going to allow us to conduct significant exploration. And we've had drilling underway since the middle of February with over 50,000 meters of drilling planned for this year. Big chunk of that on resource infill drilling at Shovelnose, but also 15,000 meters of exploration drilling. And that's a really important piece that I'll take you through towards the end of the presentation. Just a bit on the Dundee transaction. I think it's fair to say that the market, and when I say that, sort of investors and the venture market in Canada, hasn't really seen well-structured earn-in and joint venture arrangements over the last 10 to 15 years. Typically, a major party will come in, or the bigger company will come in and take a 75 or 80% interest. And where we landed with Dundee, I think, is in a much better place. It was very important for us, if we were going to entertain this sort of transaction, that we retain a 40% interest, and we've done that. And importantly, we retain the right to transact on our 40% interest. So our hands aren't cuffed in any way by a right of first refusal on our interest going forward. There are staged expenditures that Dundee needs to make, including $30 million, which is a firm commitment that they're spending right now in support of the infill drilling that we're doing, as well as in support of pre-feasibility work that's underway that I'll talk about. But ultimately, they'll go through those stage gates, spend $85 million, and have that 60% interest. I think importantly, they do earn an interest once they spend the $30 million. So this is a partnership. It's not a situation with a big party coming in, dipping their toe in. If they don't like what they see, pulling it back out. They've already done the work, and Dundee's already comfortable with the asset and that this is buildable. And I think it's something that's really important for you to keep in mind, is that this is a deposit that is going to be developed into a mine. So for Westhaven shareholders, just looking at our structure, coming kind of out of that conversation, I think it's just worthwhile pointing out we've got 260 million shares outstanding, fully diluted. We're just over 300 million shares. That share structure is going to remain intact now through the next $85 million of expenditures, assuming that Dundee carries on with the expense. That's the real benefit. So that investment is going to see the project advance through pre-feasibility that's underway, through feasibility, and significant exploration happening at the same time. So it basically allows new investors to build a position in the market, and you don't need to worry about a dilutive 150 million share financing hitting the market on a Monday morning where we've needed to raise the funding in order to do the work. That is taken care of. All we need to cover now is our G&A and our marketing budget. We have more than enough money on hand to do that. We currently started June, I think, with just over 2.5 million Canadian dollars in the bank, and we have 35 million warrants that are in the money. They're priced between 12 and 22 cents, and they come due between now and July of next year, so sort of the next 13 months, and we'll realize 6.5 million Canadian dollars, and that's more than enough to cover our costs going forward. The company, as I'll touch on, it's been, well, I'll touch on it now. The company is over 15 years old. It's never been reorganized. It's never had a rollback. And the most important number I think on the slide is the fact that insider ownership and directors and officers is still over 16%. And the only way you have a company that's done our kind of work and made these sorts of discoveries and still have that kind of insider ownership is when there's been continued investment in the company going forward and helping to support the company through the discoveries and the evaluations that we've made. And that really, I think it's an excellent example of alignment of management with shareholders. It's what really drove our decision making when looking at how are we going to advance this project in a way that honors the investment of our current shareholders to get the project where it is. And it's a big part of why we landed on the agreement with Dundee at where we did. So the project itself, I mentioned we're in southern British Columbia. For those of you that have been up into the Pacific Northwest, so we're just outside of Vancouver, so just north of the border with Washington State. We are not in the hinterlands of Canada by any means. From Vancouver to get to our main property, which is called Shovelnose, in the center of the map you see here, the purple area, is about a 2.5-hour drive on a 4-lane divided highway. We're just about half an hour south of the city of Merritt, where we work from. We have a field office there. All of our crews work out of Merritt. And it's Shovelnose is the southernmost of 4 properties that we have along a belt of rocks that are called the Spences Bridge volcanic rocks. And that's how the belt gets its name. They're very unique, a very unique belt of volcanic rocks that hosts this low sulfidation epithermal mineralization that we're focused on. Skunka North, Skunka, Prospect Valley, I'll come back to those, all highly prospective for more mineralization. But the discoveries that the company has made are on Shovelnose, which is the southernmost property. Importantly, this is a region of British Columbia where there's active mining. It's in rocks that are kind of outboard of the volcanic rocks, but we have the Tex Highland Valley copper mine it's in sort of the north central part of this map. Down in the south, Hud Bay operates the Copper Mountain project. Coeur Mining operates the New Afton mine from Kamloops. And a couple of junior companies like Talisker's reopening the Braylorn mine just off to the west, and just north of this Plan View, Cisco Development is building out the Caribou mine. So it's a region of British Columbia where the government is granting permits for mine expansions, for new mines to be built. You can move, there's a path to move projects through the permitting process. An important framework for that in Canada, obviously, is around First Nation engagement. Importantly, our properties are within the traditional territory of the Inca-Clattman Nation. There's 15 communities within that nation. They all have revenue sharing agreements in place with the province of British Columbia, so they're seeing financial benefit from the active mining that's underway. They have businesses that support the activities on those mine sites, and we are fully engaged with those communities and using some of those services for our current work. And I think that's just important to point out, that we have a path forward on the permitting side. So just Shovelnose, you can picture where that is on this map. This next slide zooms in on it. It's kind of an oblique Google Earth view of Shovelnose, and there's a red box there. And that red box is where the deposits that we've discovered are located. Importantly, when we talk about exploration towards the end of the presentation, about 94% of all the drilling that Westhaven's done is in the area of that box. So there's lots of scope for additional exploration outside of that area. You can see the white line in the northwest part is the Coquihalla Highway. So that's that 4-lane highway that I mentioned, just 2.5 hours from Vancouver. And the power line you see is actually a major power transmission line that brings power from the interior of British Columbia to the lower mainland where Vancouver is located. If we zoom in on that red box, it's sort of the area of focus for our project. And you see three sort of gold-colored blobs. Those are the deposits that we found, Shovelnose in the south, and then up to the northwest, we have FMN and Franz as two sort of satellite deposits. About 85% of the ounces of our global resource, which is about 1 million ounces, are within the south zone. That's the focus of the mine development. The other important things you see here, this is sort of the infrastructure layout of our preliminary economic assessment that we completed, as I mentioned, in March of last year. So there's a dry stack tailings facility. There's also a paste plant where we'll be pumping back about, we still need to figure this out, but maybe half of the tailings will end up being pumped back underground. And then there's a processing plant there. This is an underground mine. The black dots that you see are the portals, and then there'll be a decline access to each of the deposits. And the view that you see, it's as important, we'll see another image later on, is basically those gold areas are the plan view extent of the underground workings on each of these deposits in the mine plan. So these are not open pit mines. The fact that it's underground is really helpful from a First Nation engagement and a community engagement perspective. And it's actually the cheapest way to develop these deposits. They're not deep, as we'll talk about. I think the deepest part on South Zone is about 325 meters, so 1,000 feet, give or take. It's relatively shallow, but the access with the decline is actually quite helpful for us when we look at sequencing in the pre-feasibility work that we've now started and have underway. So just the economics on the preliminary economic assessment rather from last year. A lot of standard numbers that you see here: 450 million Canadian dollar net present value, over a 40% internal rate of return. Our base gold price that was used in the study is $2,400 an ounce gold US, $28 an ounce US silver, and a 72-cent Canadian dollar, so 70 cents US to a Canadian dollar. 2-year payback and an 11-year mine life, producing 56,000 ounces of gold a year and around 300,000, just over 300,000 ounces of silver every year. Pre-production capex is low, under 200 million Canadian dollars, and that's because of where we are. We have excellent infrastructure advantages here, which lowers our cost of just doing work. So the really important number is after tax, this project is producing between 80 and 100 million Canadian dollars every year over the 11-year mine life. It matches well other sort of advanced development stories that are in more remote areas of Canada. If we look at Canadian developers who'd be comparables, but often those comparables are producing over 100 or 200,000 ounces a year. And with Westhaven and with this discovery, even at 50,000 ounces plus a year, the margins here are really strong. And that's a real important aspect that Dundee saw in being interested in the project and why we went this way, because the market really, with where the company was at, we sort of has this metric in its mind that you need to have 100,000 ounces a year of gold production. We can see getting there, and I'll get to that in just a second. But importantly, we think the development opportunity here needs to be realized. So this is just a timeline. It shows the discoveries that Westhaven made between 2018 and 2023. It's found the 3 deposits. The last couple of years, not as much news for the market, but getting things organized. We have in place an exploration permit that covers all of the drilling we need to do to take the project through feasibility now. We released the updated PEA. And then importantly, through the end of last year and then the beginning part of this year, we concluded our funding scenario through the joint venture with Dundee, which I think is the piece the market was really looking for, is how are we going to finance this going forward? And the really important bit is we're spending $30 million probably in the next 12 months, maybe even a bit more. It's the pace at which we're investing now. $20 million to complete 50,000 meters of drilling. So that's $400 Canadian per meter, all in, including assays. And then the remainder is being used to support the pre-feasibility work that we have underway. We are spending money on this project at a pace that Westhaven would not have been able to do without this partnership with Dundee. Big part of that is the exploration, the resource infill drilling on the south zone. So that's the southernmost of the deposits that we saw on the earlier image. Again, it's about 85 or 84% of the ounces. Here we just see a cartoony long section of the deposit, of the guts of the south zone, and then a cross section on the right-hand side. The long section is just basically showing the pierce points from the drilling we're going to do. So the green diamonds you see are the pierce points that we have planned for the drilling that we have underway. So that drilling is basically mapped out on 25-meter centers through the deposit. The round circles you see here are existing drilling, and they're kind of scaled. The big black circles are intervals that are over 100 gram meters of thickness. So that's quite wide, high-grade intervals. And the blue diamonds are some of the results that we've announced so far. So we started drilling in February. We've started to announce assays from this infill drilling, and we are seeing excellent continuity of these thick, high-grade sections. Our first news release highlighted a 54-meter intersection, so 150 feet plus 165 feet or so of greater than of 9 grams per ton gold and 55 grams per ton silver. And on the cross section, it shows where that hole hits. Just above that, we had another 17 meters of 19 grams. Below that was a historic hole with 54 meters of 4.5 grams per ton gold. Rounding numbers here as I talk, so just keep that in mind. But the point is, with the infill drilling, we're going to have lots of assays to the market that are going to show strong continuity of the mineralization within this deposit. On the next slide, we see another cross section. This is just to the just off to the northwest of the section we saw earlier. It has a hole that highlighted our most recent news release, which had 14 grams per ton over 33 meters, including over an 8-meter section of 47 grams per ton gold. And that sits on another section that had very similar grades. It's the continuity, drilling going basically from 50-meter infill centers to 25-meter infill centers with this resource drilling program that we have underway. The intent is to support in the pre-feasibility study resource to basically upgrade the resource so that the bulk of the ounces are actually measured, and that's the ultimate goal. And then they can be translated, or those that fit can be translated into reserves when we conduct the pre-feasibility study resource. So that PFS, as I mentioned, it's underway as we've announced. The engineering work is happening. The drilling is expected to be done by the end of August, and then a new resource towards the end of the year, and then the PFS itself done. Call it around this time next year. We said Q2 of 2027. We're hoping we can pull that timeline into sort of late June or so of 2027. We're still working on things. As some of you will be aware, the idea of a pre-feasibility versus the preliminary economic assessment that we've completed is you start looking at trade-offs, start looking at things like throughput. Do we increase throughput? Can things look better? Looking at sequencing, where do we start the mining? Where should we actually position infrastructure and so on? And that's an iterative process, and that's what we have underway. But the other really important piece, in addition then to the pre-feasibility study and realizing on the development opportunity that we have, is exploration. Because these deposits, as I mentioned, they're low sulfidation epithermal deposits. They occur in clusters. This is our slide. Again, we can see our 3 deposits. South Zone is the big one, and the south end of that line. They all lie along a fault or a structure. And the red lines you see are quartz veining. Some of those veins have gold in them. They just don't fit within our resource or within the current mine plan. But these are the structures that we need to look at. And in our view, this is how these deposits start. I'm going to really quickly take you through what an epithermal system can ultimately look like. They occur in younger rocks, so they're actually not that common in Canada. They occur along plate margins. I am a geologist, so I have to include a little bit of talk of rocks and plate tectonics. But 3 deposits that are sort of the gold standard, if you will, for this style of mineralization are Hishikari in Japan. It's big, over 10 million ounces of production. It's been in production. It was discovered in the 80s. It's been in production since the 80s. This is what it looks like. Because it's so high grade and it's underground, it's not a big footprint. And that really helps with our engagement with First Nations. Fruta del Norte is operated by Lundin Gold. Geologically, there's a lot more going on here than just the low sulfidation epithermal mineralization. But importantly, as a comparable to us, other than being sort of underground and high grade and blind, is in the upper right, you can see a cross section, and that kind of stepping you see of the rocks. That's the same structural environment that we see hosting the South Zone deposit. And Gosowong is in Indonesia. It was operated by a company called Newcrest out of Australia. Newcrest was just taken over by Newmont. We are getting help from the past global head of exploration with Newcrest, who really like Westhaven, really like the deposit. And he's the one who sort of says, this is how these things start. You start with 1 million ounces, and then you get into production, and then you build out the vein system from there. And at Gossawong, this is sort of showing South Zone on the left-hand side, and then in the upper right is the Gossawong vein system. They actually found 10 years after they went into production on 1 million ounces, which is basically what we're looking at. 10 years later, they found 4 million ounces in a buried deposit less than a kilometer away. And you see this sort of thing with this style of mineralization. So we are really focused on the exploration piece, putting together a proper exploration model. So going back to the extent of our deposits, these are the vein systems. Again, you can see linking together our 3 deposits. With drilling that we completed last year, we looked at constraining additional faults that are of the same orientation. They're called normal faults that have that northwest orientation for the fault that hosts our mineralization. And we've either constrained or drilled through at least 3 subparallel normal faults. You can see them. 2 are to the northeast of our main Shovelnose trend, and then there's 1 to the southwest. There's probably more. These are targets for us to better drill out this overall vein corridor. And then if we step out and we look at the Shovelnose property from a distance, on these 2 maps are side-by-side views of Shovelnose. In the upper left, again, just in yellow, you can barely see our 3 deposits sitting along that structural corridor, but it extends for about 14 or 15 kilometers down to the southeast part of the property. And when we overlay rock sample results that we've returned from over 6,000 rock samples that have been collected from the property from Westhaven's work on over the last 10 years or so, what we see here on the heat map are areas with elevated antimony. And antimony is just, it's a pathfinder metal that occurs in this type of system. We'd see the same thing with other elements like arsenic and molybdenum. We'd see the same sort of highlighting. We just can see there's strong evidence for a broad corridor with epithermal mineralization along that northwest southeast trend. And that is going to be the focus of our 15,000 meters of exploration drilling this year. But if we then step out at a belt scale, and this is a really important slide, I've done some marketing with Jonathan Goodman, who's the CEO of Dundee, and this is his favorite slide that he likes to actually start with, because talking about what their overall interest is, which is very well aligned with Westhaven's view that this can be a camp of multiple deposits along this entire trend. So this gold blobby area that you see that sort of is along our claim blocks from Skookumba North all the way down to Shovelnose, those are the rocks of the Spences Bridge Gold Belt. And along a 75-kilometer extent of those, if you go from our deposits that we've discovered at Shovelnose up to the northwest to our Skookumba property, there's a little photo on the far left side here of a quartz vein. That vein is part of a drill hole that returned 20 grams per ton gold over 12 meters. It's a low sulfidation epithermal gold vein showing, and it's been drilled off, and there's evidence that there's mineralization like that on Skookumba. We see the same thing at Prospect Valley. There's a little photo of a vein there. All of these structures and all this mineralization is of this. It's the same system. It's the same plumbing system. It is a big system, and we know big gold deposits occur in big systems. We have that, and Westhaven has never been funded in a way to be able, as a junior company, to be able to drill these properties off in a systematic manner, kind of knowing that we'd be back. Often with juniors, you have what's in your treasury and you want to make sure you do a discovery, and you're not always in a position to be able to conduct your exploration in a strong, systematic manner. So we're able to do that now with this partnership with Dundee. I've talked a lot in some of my other marketing and interviews about sort of the relationship. We're kind of fully integrated right now. There's really strong alignment between the 2 teams. Late last fall, when Dundee came to site to do their technical due diligence, I've said this many times, it was the most pleasant technical due diligence I've ever been a part of. And I think it's because Jonathan and his team arrived. All the decision makers from Dundee were there. All the decision makers from Westhaven were there. And we were able to see immediately that it was a very collaborative approach going forward. So we are really well set up in the near term. I think particularly for retail investors and family offices right now, if you like the setup of Westhaven, if you like the project, if you like the style of deposit and what can ultimately be the funding model, the dilution piece, which is always so critical for a junior company, and how are they going to handle dilution? How are you going to finance the work that you need to do? We've taken care of that, and you can build that into your model when you make an investment decision going forward. So that's really, I think, the real important takeaway. along with the pace of mineralization, there will be, of news and work that we're doing. There's going to be lots of news flow on the resource infill drilling as well then as on the exploration side going forward. So I think I've just got about 5 minutes left, and I'll try and take you through a few of the questions that I see here. So thank you for those, and see how I do at that. So one question here is, at what stage does Westhaven plan to be at by the end of the year, and are there key milestones that we plan to reach? So the end of 2026, I think in terms of news flow, as I mentioned, resource infill drilling will be really important. So completing that drill program by, we're targeting the August or the end of August, early September for completion of that, and then completing a new resource and making good advancement on the pre-feasibility study. And then on the pre-feas side, as I mentioned, that's completed this time next year. And the last part is going to be exploration. So we'd like to be able to announce the start of exploration drilling, and ideally, in an ideal world, we will have announced some discoveries as well. Another question on ESG standards and the fact they are tightening globally. So where do we see at Westhaven in meeting or exceeding what investors expect from a modern gold explorer or developer? Really important question. In the Canadian context, a big part of that is the First Nation piece. I mean, we're working in the traditional territory, as I mentioned, of the Inca Nation. We have a strong engagement program with the communities of the Inca Nation. I was actually just there on Wednesday of this week to meet with Chief and Council of one of those communities. So we were working with them, have an open dialogue. Our employment opportunities, training opportunities are very important business opportunities, and those are all things we're talking about. One of the things that Westhaven, I think, has done really well is, and being at site and seeing, even as we've expanded out our team, our local team is about 50% local employees, and a big chunk of those, I would probably say about 80%, are First Nation. So that's our real focus is on, when it comes to the ESG side, is on the First Nation piece, and we're doing a number of the traditional activities that you'd also do, looking at risk management and so on with that one. So we brought in Dundee's technical experience and bench strength alongside our own team. How has that elevated the level of decision making on the project? Yeah, good. That's actually kind of a good nuanced question, and that, as I mentioned, we're fully integrated. I think that the two teams, they have built mines in this style of deposit before. Our team, our strength, it really lies along having done that, as well as found and discovered deposits in Canada, and really strong when it comes to First Nation engagement and permitting. And so the collaborative decision making, and it kind of ties in with the alignment that we've talked about, that it was very clear we both had a strong view and strong agreement on how to do this properly. That we want to make sure that we pass ourselves from the pre-feasibility stage through feasibility, with strong consultants that we brought on, to make sure that we use realistic estimates on what costs are going to be, realistic estimates on metal prices. So it definitely has strengthened, and I think importantly, as I touched on, it's allowing us to move forward at a pace that we would not have been able to do otherwise, and to make sure that the programs are properly aligned with meeting the goals and the requirements we need to go through those gates. So I mentioned drilling off the resource, say at 25-meter centers. So we're going to have a high confidence resource, and that's something that maybe a junior, when funding it on your own, maybe you wouldn't get to, or maybe you wouldn't do it at quite that level and say, well, an indicated resource is good enough. So I think is my best shot at answering that question. Another question just on how, clearly that Shovelnose is our flagship property. How aggressively do we plan to conduct work on the other properties in the portfolio? I mentioned drilling this year is going to focus on Shovelnose itself, and one of the main reasons for that is because that's where our permit covers, that we are permitted to drill there. We are doing work on the other properties, and the plan would be to have them in a position to be able to conduct exploration drilling on them next year, is the current goal. And there is sort of a funding and a sort of set aside and a view to make sure that happens. And then the question just on considering the good results, are we going to optimize the drilling to plan towards higher impact step outs versus infill? So the pure infill part of the question, that is going to stay in place. We need that drilling to support the resource for the pre-feasibility study. But yes, there are holes that are going to be quite close to the deposit on the exploration side that we will use and look to make discoveries that are nearby. And then on the exploration side, also stepping out. And I'd expect, the goal here is in the not too distant future to be able to announce the start of drilling exploration targets. We have 4 drills on the property. We are looking at ways to increase that number. We need to make sure we have the internal capacity to be able to do that. And we've ramped up really, really well from 2 drills in February up to 4 now. Our team, again, getting to site earlier this week, a real advantage of that was getting to site and seeing the team as we've expanded it out on the operations side. I think it's fair to say that we've done really well with that. But just in terms of news flow, other than just on the development side and high grade assays that we will see from the resource, and we've already started to see, the exploration piece is going to be very important. 30 minutes goes really quickly. I'm already over time here. I see a number of other questions. My understanding is I'll get those, and we will do our best to be able to answer those questions to you remotely. Feel free to reach out to me. Our contacts are on the website. Thanks very much for your time and listening in. And I hope you have a great day listening to a number of really good stories in the gold space. But please keep in mind Westhaven.